Hey, did you catch the news about the Federal Reserve cutting interest rates again? It's actually a pretty big deal, especially if you've been thinking about buying a home or just want to know what's going on with your money. Basically, the Fed lowered its main interest rate by a quarter of a point. This is the third time they've done this since September, and it brings the rate down to the lowest it's been in about 3 years. The main idea here is to help the economy grow and encourage businesses to hire more people, even though prices for things are still a little higher than everyone would like. You might be wondering what this means for mortgages. The interesting thing is that lenders kind of saw this coming, so mortgage rates had already adjusted a bit before the announcement. We are seeing rates hovering near their lowest levels in over a year. There is a good chance we could see them dip below 6% sometimes next year. If that happens, it could be a great opportunity for people to refinance their current loans or finally get out there and shop for a new home. It definitely makes the monthly payments a little more manageable for buyers. When it comes to cars, the story is a little different. Auto loan rates have been pretty steep for the last few years, and experts don't think they're going to drop very fast. It might take a while before you see a real difference there. Right now, the average rate for a new car loan is still over 7%. Because costs are high, we are actually seeing more people falling behind on car payments, which shows that things are still tight for a lot of folks. So if you are in the market for a car, just know that relief on those rates might be a bit slower to arrive. Credit cards are another area where you won't see a huge change overnight. Interest rates on credit cards are still historically high, sitting just under 20% on average. While this rate cut helps a tiny bit, it's going to be a slow process. The best advice is still to focus on paying down those balances whenever you can, because the interest adds up so fast. However, any drop is a step in the right direction and could eventually save people a little money on their monthly bills. For savers, this news is a bit of a double-edged sword. When loan rates go down, the interest banks pay you on savings actually goes down too. If you have money in a high yield savings account or a CD, you might notice the returns getting slightly smaller. Top rates are still decent right now, but they will likely continue to slide as the Fed keeps cutting. It's still better than it was a few years ago, but the days of super high returns on cash savings might be cooling off. Finally, this is actually good news if you're looking for a job or worried about the job market. Lower interest rates make it cheaper for businesses to borrow money, which can help them expand and hire more workers. The Fed is basically sending a signal that they care about keeping people employed. It might take some time for this to trickle down, but it's a positive sign that they're trying to support the labor market. If you have any questions about how this affects your plans to buy or sell, just let me know and we can chat more about it. So here is a quick update on what's happening with the mortgage rates. The average rate for a standard 30-year home loan went up just a tiny bit to 6.22%. Even with that small increase, the good news is that we are still sitting very close to the lowest rates we have seen all year. This is really encouraging if you've been thinking about buying a home soon. If you're looking at a shorter term, like a 15-year mortgage, which people often use to refinance, those rates also nudged up slightly to about 5.54%. It helps to keep some perspective here because things are actually much better now than they were a year ago. Back then, the 30-year rate was averaging around 6.6%. So we are definitely in a more favorable position today. You might wonder why these numbers change from week to week. Well, It mostly comes down to big economic factors like decisions from the Federal Reserve and how investors are feeling about the economy. Mortgage rates tend to follow the 10-year Treasury yield, which also crept up a little recently. It's all part of the normal ups and downs of the market, but I'll keep watching it closely for you. You gotta hear the good news about where the housing market's likely heading in 2026. After a few years where things felt a bit stuck, top economists are finally using the word opportunity to describe what's coming next. The big forecast from the National Association of Realtors predicts a significant rebound, with sales expected to jump by roughly 14%. It really looks like the market is waking up and getting ready to move again. A huge part of this shift comes down to mortgage rates. The experts project that rates could drop to around 6% next year. That might sound like a small change, but it's actually a big deal compared to where we started in 2025. This drop alone could open the door for millions of people who've been waiting on the sidelines. We are talking about renters who want to buy and families who felt priced out finally getting their chance to make a move. For anyone thinking about selling, there is a very important takeaway here. Even with more buyers coming back, pricing your home correctly matters more than ever. Buyers are still very budget conscious, so they are paying close attention to that monthly payment. Homes that are priced just a little too high are likely to sit on the market longer. On the other hand, a well-priced home is going to stand out immediately and likely sell much faster. We're also seeing a change in the types of homes available. There is a growing demand for mid-priced properties that match what people can actually afford. Builders are catching on to this too. And we are seeing more townhomes being built as a great option for entry-level buyers. It's all about aligning what is for sale with what people can comfortably pay. Of course, real estate is always local, so this recovery will look different depending on where you live. Areas with strong job growth and affordable housing are going to see the most action. Places in the South and Midwest are still attracting a lot of new residents, but overall, the outlook is positive. It feels like the market is finally finding its balance again, bringing more options for buyers and sellers alike. Now, I wanted to chat about some really encouraging news coming out of the Florida real estate market. If you've been wondering where things are heading, a recent report from Florida Realtors gives us a lot of reasons to feel optimistic. The big takeaway is that our state is still growing fast, and that means the demand for housing isn't going anywhere. To give you an idea of the scale, experts are projecting that between 2026 and 2030, Florida is going to add about 300,000 new residents every single year. That is roughly 800 people moving here every day. Think of it this way. It's like we are adding a brand new city somewhere between the size of St. Petersburg and Orlando to the state every 12 months. That's a massive amount of people who all need a place to call home. Our chief economist, Dr. Brett O'Connor, pointed out that this population boom is the main engine driving our market. Even though we hear a lot about affordability challenges, the desire to live in Florida is overpowering that friction. What's driving this isn't a baby boom, but rather migration. We actually have more people passing away than being born here, but the number of newcomers moving in from other places completely tips the scale back to growth. We are already seeing this play out in the numbers. You might have noticed that interest rates started dipping back in August, and that sparked something we haven't seen in a while. For the first time since 2021, we have had a multi-month streak of rising home sales. It shows that there has been a lot of pent-up demand just waiting for the right moment to jump back in. Looking further ahead, the pace of growth is expected to cool down very gradually as you get into the 2030s, mainly because the population is aging. But for the foreseeable future, the numbers are strong. Whether you're looking at new construction, thinking about upgrading, or even downsizing, the steady influx of new residents suggests the market is going to stay active and full of opportunity. Buying your first home is such an exciting milestone, but I know it can also feel a little overwhelming at times. There is so much to navigate between mortgage terms, competing with other buyers, and just the general pressure of the market. It's really easy to overlook some key steps or make quick decisions that you might regret later. I want to walk you through a few common mistakes I see first time buyers make so you can avoid the stress and potentially save yourself a lot of money. One of the first things I see is people starting their search before they actually know their budget. It's so much fun to look at homes online and dream about where you might live, but without a pre-approval from a lender, those listings are really just dreams. You might fall in love with a house that's simply out of your price range, or you might lose out on a great home because the seller went with a buyer who already had their financing verified. It's always a smart move to connect with the lender early on to get a formal pre-approval. This gives you a solid budget and shows sellers that you are serious and ready to go. Another common trap is focusing only on the down payment and forgetting about the other upfront costs. There is actually a lot more to pay for than just that initial check. You have to plan for closing costs, moving expenses, property taxes, and homeowners insurance. You might also have the new monthly costs like homeowner association dues or different utility bills. I always recommend setting aside a buffer fund just for these expenses so you are not caught off guard and can enjoy the process without worrying about every single dollar. I also have to stress how risky it is to skip a home inspection. When the market's hot, you might feel tempted to waive the inspection just to win a bidding war, but that can be a very expensive gamble. You really do not want to move in and suddenly discover hidden problems like a cracked foundation or outdated electrical wiring that could cost you thousands to fix. It's worth it to have a professional look at the property so you know exactly what you're buying. Even if you just do it for your own information, it's better to know the risks before you sign it. It's so easy to get so confused on a beautiful kitchen or a spacious backyard that you overlook the location itself. A gorgeous house in a neighborhood that does not fit your lifestyle is still the wrong house. You should think about things like your daily commute, the quality of local schools, and the general vibe of the area. Even if you do not have children, good schools help keep your property value high. Take some time to drive through the neighborhood at different times of the day and maybe even chat with a few neighbors to see if it feels like home. Finally, please be careful with your spending once you're under contract. It's incredibly tempting to start buying furniture or appliances for your new place, but you really need to wait until you have the keys in your hand. Lenders often pull your credit one last time before closing. So if you buy a new car or charge a huge amount to your credit card, it can change your debt ratios and jeopardize your loan approval. It's best to just pause any big financial moves until everything is official. Buying a home is a big deal, both emotionally and financially, but you definitely do not have to do it alone. If you surround yourself with good advice and take things one step at a time, you will get to the closing table with confidence. Just trust your gut, ask plenty of questions, and remember that being prepared is the best way to buy smart. I see something happen all the time with home buyers that really surprises me. People will spend months searching for the perfect home, touring house after house, and agonizing over every detail before making an offer. But when it comes to the mortgage, the thing they'll be paying for the next 30 years, most people just stop after getting a single quote. In fact, nearly 7 out of 10 buyers only apply with one lender. It's a huge missed opportunity because spending just a little extra time shopping around for a rate can end up saving you a serious amount of money. Think of it this way. If you were buying a car or even a new appliance, you would probably check a few different places to see who had the best price. Mortgage lenders are businesses just like any other, and they don't all offer the same price or interest rate for the same borrower. One lender might look at your credit score and financial situation and offer you one rate, while another lender down the street might look at the exact same information and offer you a better deal. Those differences might seem tiny on paper, but over the life of a loan, we're talking about potentially saving tens of thousands of dollars. Let's look at some real numbers to make this clear. Imagine a typical home worth about $360,000. If you settled for a rate of around 6.25%, your monthly payment would be a certain amount. But if you shopped around and found the rate just half a percentage point lower, you could save over $1,000 a year. That is real money that could go toward furniture, repairs, just back in your pocket. Plus, having that lower payment actually makes more homes affordable for you, opening up options you might have thought were out of reach. The market's shifting a bit right now, and affordability is actually better than it's been in a few years. But that is no reason to leave money on the table. Lenders weigh things like your credit profile and a loan type differently, so you might see a surprisingly wide gap between the highest and lowest offers you receive. I always tell my clients that even though it feels like a hassle to fill out more paperwork, comparing a few different offers is one of the smartest financial moves you can make during this process. Don't just accept the first number you hear. Shop around a little because that extra effort really does pay off. If you're getting ready to sell your home, you're probably staring at a to-do list a mile long and wondering where to even start. It's the classic dilemma of deciding what is actually worth fixing to get your place list worthy and what you can skip. This is a huge decision because making the right calls can mean selling your home quickly for a top dollar versus letting it sit on the market while buyers scroll on by. The good news is that you don't need to fix everything. You just need to be smart about what you prioritize. The golden rule here is to focus on the unglamorous stuff first. I'm talking about safety, function, and basic durability. Before you dream about granite countertops, you need to tackle things like leaky faucets, loose handrails, or that rotten trim around your back door. If a home inspector is going to flag it, you should probably fix it beforehand. Buyers get really nervous when they see water stains, mold, or electrical issues because those signal expensive headaches. Even something as simple as clogged gutters or a missing smoke detector can make people wonder if the house has been neglected. Speaking of nervousness, nothing scares a buyer away faster than signs of water damage or questionable do-it-yourself projects. If you have a roof leak, soft spots in the floor, or a basement that smells a bit musty, those are absolute deal killers that you need to address immediately. And be honest with yourself about any past repairs you handled on your own. If there is plumbing held together with the wrong materials or wiring that looks like a spaghetti mess, A buyer is going to assume they have to rip it all out and start over. It's usually better to fix those things properly now rather than losing a sale later. Try to walk through your home and look at it through the eyes of a total stranger. Does the house look move-in ready? Or are there little signs of wear and tear everywhere? Buyers might overlook a dated style if the price is right, but they have a harder time overlooking dirty air filters, loose toilets, or old water heaters. These small maintenance issues make them wonder what else you haven't taken care of. That is why I often suggest getting a pre-listing inspection. It helps us find these issues early so we can fix them and show buyers that the home has been well cared for. Now, let's talk about the fun stuff like kitchens and bathrooms. We all know these rooms sell houses, but you have to be careful not to overspend. You don't need a luxury high-end remodel to impress a buyer. In fact, it often hurts you if you put brand new quartz countertops in a kitchen but leave a 25-year-old furnace in the basement. Buyers spot those mismatched priorities instantly. It is much smarter to make updates that match the neighborhood values. Sometimes a simple refresh is all you need to seal the deal without breaking the bank. Finally, think about where you will get your money back. Surprisingly, simple projects often have the best return on investment. Swapping out your old front door for a new steel one can actually pay for itself completely when you sell. Even organizing and renovating closets can offer a greater return. On the flip side, huge renovations like a major kitchen overhaul or adding a new bathroom often return only about half of what you spend. So be strategic. Fix the scary stuff, clean up the maintenance issues, and talk to a real estate agent to figure out which upgrades are actually worth it for your specific market. Ultimately, navigating the housing market requires more than just general statistics. It requires local expertise and perfect timing. I'm Albert Stepniak, a realtor with Coldwell Banker here in beautiful South Florida, and my commitment is to ensure you never miss an opportunity, whether you're buying or selling. If you're ready to move forward or simply want to know how the latest inventory affects your property's value, let's connect. Find all my contact links and resources in the description box below. Thanks for watching, and I look forward to helping you achieve your real estate goals. To make things easy, I've linked my direct contact information and a link to schedule a quick free consultation right in the description box below the video. Click on that link now, let's connect, and let's get you set up with a personalized plan for success in the South Florida market. I look forward to hearing from you.